What's up everybody, I'm Jaspreet Singh, and although everybody has an opinion about what's coming in the economy and inflation and the housing market and the stock market, most people really have no idea. And this can be problematic if you make your investment or financial decisions based off of what's happening in headlines, because the reality is that the media is in the business of selling hype. Either they're going to tell you that the world is ending or that everything is great and nothing can ever go wrong. I mean, just take a look. In June of 2022, the traditional media kept telling you that gas prices are going to keep going up and that you need to prepare for $8 a gallon across the country, maybe even $10 a gallon of gas across the country. Then just a few weeks after that, we saw oil prices come down, and along with that, gas prices also came down. And now you keep hearing about how gas prices are going to plummet and how you're going to keep seeing gas prices go down. But it gets even better. Remember back in April of 2021 when the Federal Reserve Bank and across all news you kept hearing that inflation is transitory, it's just going to magically go away. By November of 2021, just a few months later, they took their words back, saying that inflation is not transitory after all. In August of 2021, the Federal Reserve Bank, the government, and the media kept saying that inflation is on its way down. We have finally reached peak inflation and everything is starting to get better, because inflation peaked at 5.3% in August. Well, surprise, surprise, that wasn't the peak. If you made your investment decisions based off of these headlines, you're probably exhausted, tired, and burned. Even when it came to the idea of an economic slowdown or a recession, everybody from the government to the Fed to the media kept saying how it's not possible that we could have a recession, how our economy is so strong, and that you should be aware of people who warn of a recession. Well, we all know how that turned out. But now the talks are a little bit different, that the recession is going to be mild, it's going to be short, it's going to be shallow, and there's nothing for you to worry about because we're going to bounce right back. Nobody knows what's going to happen tomorrow, yet everybody has an opinion. This is why you do not want to make investment decisions based off of what's happening on headlines alone, and you want to make sure that you're digging a little bit deeper, because like I said a little bit earlier, the media is in the business of selling hype. When things are good, they're going to tell you how nothing can ever go wrong and how everybody's making so much money. And when things are bad, they're going to tell you that the world is ending, you need to sell and you need to run away, and that everything is going down. This is where you now, as a smart financial investor, need to be able to cut through the noise, find the real information, and be able to dissect that. That way you can make smarter decisions for yourself. There's an old saying on Wall Street that goes, bulls make money, bears make money, and pigs get slaughtered. What this means is that people who are bullish, meaning they think that the economy is going to grow and that the stock market's going to go up, they can make a lot of money. Bears are people who think that the market's going down, that the economy is going to go down. They also can make a lot of money. But the people that get burned, the people that get slaughtered, the people that lose all their money are pigs. Pigs are people that get greedy. They're people that want it all, people that don't necessarily know what's going on, and those are the people that lose their money. So it's not whether you think that we're going to go into a bad recession or not, it's the people who understand what's going on and can invest their money based off of financials instead of getting emotional, instead of getting greedy, but actually understand what's happening and can invest their money accordingly. What every smart, seasoned investor understands is that there's a range of possibilities that can happen. It can range from a depression to an economic boom and everything in between. And this is where now you have to be able to decipher through the information and be able to find what is actually happening. Now, before I go into what can cause the different layers of possibilities, this is where now when you're trying to find your information, that you're not just getting influenced by headlines, that you're actually understanding what's going on. Now, the number one best way to get your news is from the actual source, meaning reading the press releases, reading the actual earnings statements from companies, reading the actual statistics and reports of news surveys of the actual data that's happening. That is the best way for you to get your financial information. But the second best thing, if you're not willing to go through that time or be willing to go through that research or be willing to decipher all that information, is to use something like Market Briefs, which is my free financial newsletter, where every day my team is working to break down what's happening in the stock market, the real estate market, the crypto market, the inflation, and the global economy, all into a fun, ready to read, and easy to read newsletter. You can read it in less than 5 minutes every morning, and I promise you are going to look forward to reading Market Briefs every morning. And the best part is it's completely free. So if you want to join Market Briefs for free, I'll put the link to how you can do it down in the description. below. Now, if you really want to understand where on the spectrum we're going to be in the economy, the one entity that you want to pay attention to is the Fed, also known as the Federal Reserve Bank. The Federal Reserve Bank is the central bank of the United States, and they are in charge of controlling our monetary supply. And when I say that they're in charge of controlling our monetary supply, what that means is they have the ability to influence the amount of money in our economy, and they have the ability to influence how much inflation that we have in our economy. And the way that they do that is through the ability to print money, and it's the ability to control interest rates, and it's the ability to lend money to the United States government. So what this all means is the Federal Reserve Bank has the power to control money in our economy, and this money will then influence how our economy operates. If they continue on their fight to bring inflation down aggressively, they need to then cool down the monetary supply, meaning they need to pull money out of the economy. If you pull money out of the economy, this generally hurts markets. It hurts the stock market, it hurts the crypto market, it hurts the real estate market, and it also hurts the economy. So the question is now, how aggressive is the Fed going to be into the next 6, 12, 18 months to fight inflation? Are they going to continue to keep raising interest rates? Are they going to continue to keep selling off their assets, meaning burning cash essentially, getting cash out of our economic system, continuing to do more quantitative tightening? If they continue to do that, you can pretty much guarantee that it's going to push us into some sort of deeper recession. Whether or not it's going to be a depression will be just a variation of how aggressively that they do it and how many dominoes fall as interest rates go up, as the economy slows down, as people lose their jobs. How much further is it going to go before the Federal Reserve Bank starts stimulating? And this is where everybody has predictions. You have some people saying that the Federal Reserve Bank is going to start stimulating the economy in 2023. You have traders saying that the Federal Reserve Bank might even start stimulating before the end of 2022. Nobody knows. We're not in the brains of the Federal Reserve Bank. We know what the Fed should do, but what the Fed should do isn't always what the Fed does do. And so this is where you want to understand the different possibilities and know what can trigger the different possibilities. That way, no matter what happens, you can come out of this a financial winner. So now, going back to what can happen. Well, there's a difference between inflation and the economy, the recession. And the Federal Reserve Bank can either fight a recession or they can fight high inflation. They can't do both at the same time. And this is the puzzle that they're trying to solve right now, where they're right now trying to fight higher inflation by raising interest rates. But the problem is higher interest rates mean a slower stock market, a slower crypto market, a slower housing market, and a slower economy. So the question then becomes, what's going to break first? Inflation or our economy? And if the Fed has to keep raising interest rates to bring inflation down significantly, well, then that can break the economy. And the question is, how far are they willing to go? And nobody knows the real answer to that. You have a lot of people speculating that our current Federal Reserve Bank doesn't have the same ability to raise interest rates the way that we did back in the early 1980s. In the early 1980s, the Federal Reserve Bank then had to raise interest rates up to almost 20%, meaning if you wanted to get a mortgage, you were paying 15 to 18% a year on a fixed rate 30-year mortgage. If they did that today in this economy, you can bet that our economy would go into a depression. Our entire housing market would collapse. Our stock market would just crash. Crypto would get decimated. It would be very painful for the economy. But the question is now, how aggressive are they going to be to fight inflation? Because we don't know that. We also don't know how high they have to go in order to bring inflation down. What we do know for sure is that the Fed is going to have to get more aggressive. They're going to have to continue to stay aggressive to really bring inflation down. The next question becomes, when is the Fed going to declare a win on the inflation fight? Is it 7% inflation? Is it 5% inflation? Is it 3% inflation or 2% inflation? Right now, the Federal Reserve Bank says that they want to bring inflation down to 2%. That once we hit around 2% inflation, that they will no longer continue fighting inflation. But the vast majority of traders don't believe them. They don't think that the Federal Reserve Bank is going to do what it takes to bring inflation back down to 2%, because that is going to be very painful, and that will push us up higher here on this recessionary scale of how bad the recession will be. So now, If the Federal Reserve Bank declares a win on the inflation fight at, say, 5%, well, that means we still have extremely high inflation. And then they might say, okay, our economy is slowing down. People are losing their jobs. And we're seeing more layoffs. We're seeing more bankruptcy. So now we want to now stimulate the economy. If they do that, well, now that's going to help push a boom in the economy, because now they might start cutting interest rates. They might start doing more quantitative easing. They might start printing more money. They might inject this money into the markets, or they might inject this money into the economy, and that will cause a short-term boom in the markets. But then long-term, that causes more inflation, which put us in this economic slowdown in the first place. So you can start to see the big conundrum that the Federal Reserve Bank is trying to balance between. But this is where now you got to understand that everybody has an opinion on what's going to happen, but you have to understand that you have this whole range of possibilities, and if the Fed starts stimulating to cause a boom, well, that's going to make a bigger bust later on. And this is why you have to understand that nobody can predict or guess perfectly what the Federal Reserve Bank is going to do, which is why when you're investing your money, you want to be investing your money based on fundamentals. You want to invest your money for the long term, and you want to have assets that are strong, that can thrive in any economy, or at least invest your money in different assets that can thrive in different types of economies. That way, no matter what happens, you can come out of this a winner. And if you are looking for ways to do that, just look at some of the other videos that I have on our channel, where I talk about the educational side of how to actually start investing and how to do your research when it comes to investing your money.
So now we have the highest home prices ever. We saw more than a 20% growth in home prices in the last year. We saw more than a 20% growth in rental prices in the last year. And now mortgage rates are skyrocketing. Mortgage rates have doubled since the beginning of 2022. So within 1 year, like in 6 months of 1 year, mortgage rates literally doubled.